Welcome to ETF Wrap, your weekly digest of the top stories in European ETFs. This week, US fund giants targeted European expansion, with Pacer ETFs launching 3 strategies and Janus Henderson acquiring fixed income specialist Tabula Investment Management. Elsewhere, the European Securities and Markets Authority launched a review of UCITS eligible assets with a view to adding cryptocurrencies amid evolving market conditions. And finally, State Street Global Advisors shortened the settlement times on dozens of ETFs ahead of a move to a T+1 cycle in the US this month. First up, Pacer ETFs and Janus Henderson are expanding their operations into the European ETF market. Pacer ETFs has launched 3 ETFs in Europe from its flagship Cash Cow range, which raked in a total $35 billion in AUM across 2023 in the US. Bruce Cavanaugh, Vice President and Portfolio Manager at Pacer ETFs, said the firm's entry into the European market is more than just a geographical expansion and signals a step forward with its advisor community. Concurrently, Janus Henderson, following its acquisition of Tabula Investment Management, is set to introduce a suite of actively managed ETFs while maintaining Tabula's existing fixed income range. Commenting on the acquisition, fund selectors have noted that the tie-up could mark an accelerated rollout of actively managed bond ETFs in Europe. The European Securities and Markets Authority has launched a review of the UCITS Eligible Assets Directive, last updated in 2007. The review aims to clarify definitions and standardise the interpretations of the type of assets UCITS funds invest in. Highlighting divergent European regulatory practices and investor protection concerns, ESMA has opened a call for evidence to understand the risks and benefits for including more exotic asset classes, including crypto and commodities. Stakeholders have until the 7th of August to provide feedback. State Street Global Advisors has shortened the settlement time of 42 ETFs ahead of the move to a T+1 cycle in the US later this month. Impacted ETFs have significant exposure to US, Canadian and Mexican equities, and the ETFs will see their creation and redemption settlement cycles reduced from 2 days to 1. While Europe remains on a T+2 cycle, concerns have been increasingly heightening over ETFs breaching UCITS funding rules. And that's a wrap for this week. Thanks for joining and hit subscribe to keep up to date with all the latest in ETFs.